Good afternoon, traders. This is a live trade recap. I took 3 trades today right at the market open, all on the same ticker symbol. Stopped out all 3 times, so it is a red day. Does that mean it was a bad trading day? Absolutely not. I did everything according to plan. I followed my strategy. I followed my rules. I gave myself the best edge, the best chance of having a green day. And then when I lost the first 2 trades, I gave myself the best chance of having a break-even day when I took the 3rd trade. I'll go over everything in detail. But just keep in mind, this is something that new traders struggle with, is that when you have a red day, it doesn't necessarily mean you did something wrong. I like to use the football analogy. You don't have to win every single quarter to win the game, right? You can be behind, you can give up some points in the 3rd quarter, come back in the 4th quarter and win the game. So that's what we're trying to do here, and just follow the strategy and stick to the rules. So as always, I like to start by showing you my screener, so you can see how I pick these stocks that I trade. Today there was quite a few green stocks on my mid-cap screener, and there was a few that I checked out, and then I kind of settled on one because my data tells me to pick the one with the best setup and the best looking on the screener, and my chances of getting a 2-hour trade are higher in that case. So you can see LC, I checked that one out. That one was a big gainer in the pre-market, but then wasn't really doing much at the open. I'll show you that. CLF, that wasn't up there. Let's see, SOFI was the one that I ended up trading, taking all 3 trades on, and that's it. I think KGC popped up there a little bit later, and TME, TAL, TLRY, I believe those are all below the 200 daily average. Sorry, 200 moving average on the daily chart. So let's take a look at the video. You can see as I put the ticker symbols on the chart. So TLRY. So actually TLRY was kind of trading around the 200 moving average. So I marked out the previous high. Obviously if it got above that previous high, then it's trading above the 200 moving average on the daily. LC is obviously above the 200 moving average, and it gapped up. TME is below it. There's SOFI. So what I need to see on any of these ticker symbols in order to even look for a trade is I need to see the price action trading above the previous session's high. And that could be the aftermarket, the pre-market, or the previous day, whichever is the highest. That's where this gold line comes from. And as soon as the price gets over that level, that signifies strength, that there's buying strength in the stock. And that's my signal to look for an entry after a pullback. Once I see a pullback on the 1-minute time frame and I see a 1-minute candle make a new high, that's my entry. That's my trigger to get an entry. So let's take a look here on SOFI. And I did pull up some other stocks. MTH, that was running kind of an expensive stock, but I missed my entry. It would have been back here, so it wasn't really worth looking at this point. It never came back down, at least before I entered on SOFI. And then TDUP, kind of the same thing, I think. Not sure what happened on that one. I guess it just never got over its previous high. That's what. Okay, so let's take a look at my entry on SOFI. So as I said, it broke out through the previous high. Now I'm just waiting for a 1-minute candle to make a new high. I'm hovering over this candle, and the high is 1602, so I want to see 1603 or better. And there we go. It bounces, and I hit my hotkeys, and I get filled at 1604. 1 cent slippage, not a big deal at all. And then I bring my stop up to the low of the previous candle. I decided to do that as opposed to putting it at the low of this red candle, because you could see a clear kind of uptrend on the lows. So the only time I'll put it at the low of the couple of previous candles is if it's like a consolidation area, if it's flat. And that's not the case here, so it was very clear to me to put my low at the low of the previous candle. And then I put in my target using my 2-hour calculator just to make sure I calculate everything correctly. Now I'm just switching. So this is where I decide, based on my statistics, it's more likely that I win a trade if I stay with the same ticker symbol. Looks like TDUP did break out over that previous high, but not really a concern of mine. So this is where I decided to just stick with SOFI, S-O-F-I, because I know that if I get stopped out of my first trade based on my statistics, my second trade is even more likely to work out, and my third trade is even more likely still to work out if my second trade fails. So I'm just going based off my statistics, and that gives me the best chance of winning a trade. So you can see here it popped up to 16.18, finds a little resistance, pulls back, but I've got my profit target and stop loss out, so there's nothing really for me to worry about. That's just me adjusting my stop loss on my swing trade with SPXL. And it does one more pop, goes up to 16.24. I did mark out if I would have gotten my ideal entry, which is only I think a difference of 1 cent. 16.29 or maybe 2. 16.29 would have been my profit target. Still didn't get hit, so it wouldn't have mattered even if I got a perfect entry. 16.24 was it. And then I know there's going to be a lot of traders out there watching this, especially if you're not used to my trading style, that see this and say, well, I should have got out. I got really close to my target. Well, I did that for hundreds of trades, and I tracked all of the statistics, and I was always red in the end whenever I sold early. Because what happens is I turn this potential 2R trade into, let's say, a 0.9R trade or something like that. And then the next time a trade goes against me, I lose 1R and it knocks out all the gains of this trade. Here, if I win 2R, then I knock out 2 losers. And as long as I can win more than 33% of the trades over time, then I am going to be profitable in the long run. So there's no question in my mind that the right thing to do is to hold to 2R. It's not based on a feeling, a hunch, or what someone else says. It's based on my actual statistics after tracking hundreds of trades. All right, there's where I get stopped out. So now my strategy says if I get stopped out and the ABCD pattern hasn't been broken, that means you see this red line down here? That's the absolute bottom of the ABCD pattern. If it starts here and this ends up being point B, and now we're just kind of waiting for point C to form. Obviously, we thought point C was back here, but that didn't end up being the case. So anyway, let's keep moving. Now we're looking for the next entry, since that point A wasn't broken. And as soon as a 1 minute candle makes a new high, that is my trigger to enter. I think it happens on the next candle. And again, statistically, this trade is more likely to work out than the first, but it doesn't have to, and that's why we use stop losses. So here's the high of this candle, 1593. So as soon as I see 1594 or more, then I hit my hotkeys to get in. So watch this price bubble. I think it happens really quickly here. There's 1594. You see I triggered my hotkeys. I got filled at 1593, which if the trade worked out, that would be a little bit of a bummer because you would lose 2 cents per share on the profit. But if it stops you out, then it's 1 cent less of a loss. So in this case, it worked in my favor because it ended up stopping me out. And then again, even though I got stopped out a second time, my strategy and my plan and my results of my data tell me I need to take the third trade because it has, at the point of taking this trade, it had a 62% chance of working out, which is pretty good odds, especially when break even is 33%. So it's a trade you must take. And it gets triggered immediately, and I kind of fumbled with the hotkeys, but it didn't make any difference in the end. I'll show you exactly what happens. So here I'm hovering over the candle, and kind of as I'm figuring out the high, it's breaking it. So the high is 1590. I need to see 1591. Right now it's at 1593. And I noticed that, and you can see I kind of mishit my keys, and then I decided to just give it like a split second longer to see if it kind of bounced back down. And it looked like it wasn't going to do it, so I just triggered my hotkeys and got in, because I've been there before, and a lot of times you miss your entry and then this thing just takes off, and it looked like that's what it was going to do. This is a very good sign that the stock is now going to head to all-time highs possibly, which I don't even need at this point, because when my risk is 10 cents, I only need 20 cents out of the trade, so I just need it to get to 16.14. And even if I would have gotten the perfect entry on this one, I think my target would have been 1610. You could see huge green engulfing candle, or 1605 would have been my target if I would have gotten the perfect entry, but still didn't get anywhere near that. I was just looking at some other previous resistance. I really didn't see any reason, going to higher time frames of why this thing wasn't able to get over. And that just, goes to show you, like, technical analysis, price action reading, it's not a perfect science. Things don't always work right. The charts don't do what they're supposed to do. And that's why you use stop losses. And that's why you have either a max loss per day, or in my case, I stop after 3 trades. And I'm usually, when I trade full position size, which I'm not doing right now, I'm usually well under my max loss on a 3-loss day. So that works out well for me. And when I'm trading full position size, my max loss is 1% of my account, which is a much better thing to do if you're a newer trader and you're trading with a cash account. So there was the third loss, and then you can see what happened is it actually broke down through that point A of the ABCD pattern, which would have been nice if it would have done that after the first loss, because then I wouldn't have had to take any more entries on it. But that's just the way it goes sometimes, and all you can do is follow your strategy, your rules, your plan. Use your statistics to tell you what the best thing to do is, and that's what I did in this case. So I gave myself the best possibility of making money today, and then the best possibility of breaking even. And unfortunately, it just didn't work out, and that's why we use stop losses. So the fact that I'm only trading with 1 share right now is a great thing, because I'm taking test trades. And it's a great thing for today. Overall, if I was trading full position size, I would be making actual money right now. But that's not what this is about. This is about collecting data. But I'll just show you what we lost today, losing those 3 trades. And this is why it's so important to just take 1 share trades when you are test trading, or if you're new. We lost 36 cents and those 3 losers. Not a big deal at all. So that's it. So let's take a look at the spreadsheet, and then we'll finish this thing up. So we're way down here now. So unfortunately, it was a 0% day. I think this is only the 5th one since I've started. So we've taken 53 trades now. Let me just show you each one of those trades here. There's SOFI on trade 1, trade 2, and trade 3. So 53 trades so far. The average of all our days, the win rate is 51% basically. But the actual average of all the trades I've taken, including some error trades and including some trades beyond trade 3 that I was doing in the beginning, the win rate is just below 40% now. Again, that's very profitable when your break even is 33%, especially over the course of many trades. And the win rate without errors, so when I remove the error trades or trades that are no longer part of my plan, the win rate's 50%. That's extremely profitable. And then the average of both of those is about 45%, which may be more realistic to what I may end up trading in the future. Win rate, if I've only taken 3 trades, is 46.5%. Actually, that I don't think I updated that one. I'll have to double check that. I may or may not have updated that one. That looks right though. But anyway, win rate, these are updated. Win rate for the first trade is down 39%. Second trade, basically 44%. So you can see that that second trade has a higher probability of working. And trade number 3, 55.5%. So results so far with all of the trades, we're up 10R still. We're up 10 times the risk, even with the 3 losers from today. If I've only taken 3 trades from the very beginning, instead in the beginning I was taking trades 4, 5, 6, up to 10 if I wanted to, but that never happened. 15R if I stopped after 3 trades, it's even with today's losses. So, and there's some other data that I went over in videos yesterday, and I'll go back over this stuff. There's a whole bunch of other analysis that I've done since then. A couple of more questions that I've asked and answered. So I'll go over all of that stuff toward the end of the week and release it on the weekend. But anyway, that's it for today. As always, just stick to your plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.